The first $100,000 is the hardest step. The first $100,000 is the hardest money you will ever earn. And it's not because the world is unfair, nor is it because the government taxes you. It's not even because your boss is an idiot. It's hard because you have no capital. And without capital, you're just a hamster running in a wheel, all sweat and no leverage. People love to fantasize about compound interest. They read those neat little charts showing how a 10% annual return turns you into a millionaire. But then they forget one inconvenient fact. Compound interest is useless if you have nothing to compound. That is the cruel joke. Everyone wants the snowball effect, but nobody wants to push that damn snowball up the hill in the very beginning. When I was young, I didn't dream of billions. I thought about how the hell I was going to scrape together my first few thousand. Rent, kids, divorce, it all piles up on you, and no one is there to lay down a safety net. Do you think rich people are playing the same game as you? They aren't. They already have chips on the table. You are still trying to place a bet. The reason the first $100,000 is a hell of a grind is simple. You are working with your muscles, not your money. Every dollar is your sweat, and every step feels like an uphill battle. You save $500, and then the car breaks down. You stash away $1,000, and suddenly your kid needs braces. The world conspires to remind you that being poor is expensive. But here is the paradox. The moment you cross that invisible line of $100,000, you feel a shift. The money starts working. A 10% return suddenly starts to mean something. $10,000 from 100 is not at all the same as $50 from 500. People think I'm exaggerating when I call this the most important financial milestone in your life. But I'm not exaggerating. You can be broke with brains, broke with ambition, and broke with charm. None of that matters until you get that base capital. It's not about intelligence, it's about stubbornness. The first $100,000 will take you years. The second $100,000 will take half that time. By the time you reach $500,000, you'll look back at the struggle for the first 100 and laugh. If you still have the energy to laugh. So yes, it is pure agony, but you have to do it. Nobody can compound zero. People romanticize hard work. They think that if they just put in enough hours, the universe will reward them. But that's bullshit. If labor alone made you rich, miners would be billionaires. The truth is cruel. Salaries are capped. Effort doesn't scale, and time doesn't compound. You can work yourself to death and still end up with nothing when the paycheck stops coming. When I was starting out, I saw people who worked harder than me every single day. Factory workers, bricklayers, clerks working double shifts. Some of them were even smarter, but they stayed poor because their sweat evaporated the moment it hit the floor. They never built capital, and capital doesn't get tired. Capital doesn't ask for days off and doesn't come home drunk. It just sits there and quietly multiplies, as long as you don't mess it up. That is the part nobody wants to admit. As long as your money isn't working for you, you're just another beast of burden. And if you're relying on a raise, a promotion, or a job change to get rich, you're already on the losing side of the board. You might get a raise today, and tomorrow, inflation will steal it. You might get a fat paycheck, and taxes will slice it up. You can grind away at 3 jobs, and your body will give out before your bank account fills up. Labor can sustain your life and pay the rent, but labor will never compound. That is why the first $100,000 is a war of attrition. You are clawing your way out of the labor trap and stacking your first pile of chips that can actually sustain themselves. Once that pile exists, you cross the line. Suddenly, 10% is no longer a rounding error. Suddenly, the market can pay you more in your sleep than your boss pays you in a week. I'm not saying you should quit your job. I'm saying you should stop believing that a job alone is a ticket to life. The world is full of broke geniuses who never escaped the treadmill of a paycheck. The only way out is capital. Cold, hard, accumulated capital. Until then, your labor isn't saving you. It's just keeping you tired. The market has a way of testing your patience before rewarding you. In the beginning, the numbers are insulting. You save $6,000 in a year, invest it, and maybe get $600 back if things go well. $600 is one broken AC unit, or a couple of dentist bills, nothing life-changing. And that is exactly why most people give up. They look at the measly returns and think, why bother? They'd rather spend it on a new phone, a vacation, or leasing a shiny car. At least then they feel something from their money. That is a trap. Small numbers feel meaningless, so people never let them grow into big numbers. They strangle compound interest before it even gets a chance. I've watched people do this my whole life. They start saving, they get bored, they pull the money out, spend it, start over, and quit again. They never understand that the only way compound interest works is by letting time do the heavy lifting. Nobody wants to wait. Nobody wants to grind through the years when the returns impress no one, not even yourself. But here is the irony. Those boring years are the toll you pay to reach the magic of compound interest. You can't skip them. You can't hack them. The numbers won't bend just because you're impatient. When I was young, I didn't see the magic in the numbers either. My early investments barely moved the needle. I had bills, setbacks, even disasters that wiped out months of progress. It felt like I was running in place, but the discipline to stick with it, that is where the game changes. One year, you notice that your capital earned as much as you saved. The next year, it earned more than you saved. That's when the people around you start asking, how did you get so lucky? It wasn't luck. It was endurance. The trick isn't in being a genius. The trick is in not quitting when the numbers are small. If you can survive the psychological pain of watching your money crawl instead of sprinting, you will eventually see it fly. But almost nobody survives that part. They look at a few $100s in profit and decide it's not worth the effort, which is why they stay poor. Small numbers test your patience. Big numbers reward it. But you will never see the latter if you can't stomach the former. The fastest way to stay poor is to raise your standard of living every time you increase your income. Most people do exactly that. They get a raise, and the first thing they do is buy a bigger car, move into a bigger apartment, or book a vacation they couldn't afford last year. They call it rewarding themselves. I call it shooting yourself in the foot. You don't need a PhD in finance to understand this. If you spend everything you earn, you will never build capital. If you keep inflating your lifestyle, you will never cross the $100,000 mark. It's arithmetic, not philosophy. I've seen lawyers, doctors, and even executives fall into this trap. They make six figures, but live like kings. They lease German cars, buy houses with more rooms than they use, and send their kids to schools they can barely afford. On the outside, they look successful. On the inside, they are one paycheck away from panic. And here is the kicker. They feel entitled to it. They think, I worked hard. I deserve this. Sure, you deserve it. You also deserve to stay broke if you think that way. Wealth is built on discipline, not on indulging your desires. I lived through the Great Depression and saw people in fancy suits with zero in the bank. You quickly learn that appearances don't earn interest. Savings do. If you want that first $100,000, you can't play the status game. Forget what the neighbors think. Forget what your coworkers drive. Forget about impressing people you don't even like. The game is simple. Earn more than you spend. Save the difference and invest it. Do this long enough, and you will reach the milestone. Fail to do it, and you'll stay on the treadmill until you're old and bitter. People sabotage themselves because they confuse comfort with progress. They think living better means moving forward, but it doesn't. Real progress is invisible. It's a growing balance that you don't touch. It's compound interest that you don't interrupt. A car loses value the second you drive it off the lot. A dinner is gone in 2 hours. A vacation becomes a memory by next week. But the capital you've tucked away is quietly working for you every day, whether you are awake, asleep, or dead. If you can't control your urge to consume, you will never have the discipline to invest. And that is exactly why most people never get their first $100,000. It's not that they can't earn it. It's that they can't stop spending it. That is the difference between you and the rich. They have capital, and you don't. Capital is leverage. It tilts the board in your favor. It doesn't complain, doesn't get sick, doesn't demand a pension. It just multiplies. Take $100,000 at 10%. It spits out $10,000 a year without lifting a finger. That's almost $1,000 a month. It's the equivalent of working a lousy part-time job, except you don't have to show up. Now compare that to the poor guy who is still hustling. He saves a few hundred a month. Maybe he's on a treadmill, sweating to stash away crumbs. The investor with capital collects money while he sleeps. That is what leverage looks like. Once you have capital, the rules change. Banks return your calls. Opportunities come to you. You can take calculated risks without risking starvation. I've seen this in my own life. When I had nothing, every mistake threatened to grind me into dust. By the time I had capital, I could afford to make a mistake every now and then. And believe me, I made plenty. The difference was that I could recover. That is leverage, and people underestimate it. They think money is just numbers in a bank, but it's not. It's freedom. It's a safety net. It's a battering ram that opens doors for you that will never open for the guy living paycheck to paycheck. You can buy stocks when they are cheap. You can hold them when everyone else is panicking. You can start a business without begging for loans. You can walk away from a bad boss because you aren't one rent payment away from disaster. That is what $100,000 means. It's not just numbers. It is the moment you stop being powerless. Don't get me wrong. 10% of $100,000 won't make you rich. But it is proof of concept. It shows you that the game works. From there, everything compounds faster. Your returns, your confidence, your ability to stomach risk. Until you have capital, you are just a laborer with dreams. Once you have it, you finally get a seat at the table. And in this world, the table is where the money is made. You don't need to be a genius to get rich. You just need to avoid doing stupid things. But most people can't do that. They chase status with borrowed money, max out credit cards, take out auto loans, buy houses they can't afford, and then act shocked when they don't have a cent left. Debt is the opposite of compound interest. Instead of money working for you, it works against you, relentlessly and silently, every single day. I've seen people with decent salaries trapped for life because they couldn't stop being stupid with money. They refinanced their homes to buy toys. They racked up restaurant bills. They carried balances on credit cards at 20% APR while bragging about making 10% in the stock market. That's not investing. That's self-deception. The cost of stupidity is invisible at first. You don't feel the chains until they pull tight. But by then, you've wasted years when compound interest could have been on your side. In 1973, I watched smart people lose fortunes because they bought stocks on margin. They borrowed to chase hot tips, thinking they were clever. When the market crashed, their stupidity cost them everything. It didn't matter how much they believed in their stocks. Debt doesn't care about your optimism. Avoiding stupidity means saying no to things that shine but are rotten. To easy credit, get-rich-quick schemes, and gambling dressed up as investing. You don't need to be a genius to bypass these traps. You just need to be disciplined. The first $100,000 is hard enough. There's no need to dig yourself a hole. Don't sabotage yourself by handing compound interest over to the bank instead of earning it yourself. It's amazing how simple this game really is. Spend less than you earn. Don't borrow for junk. Save and invest the difference. Stick with it. But simple doesn't mean easy, because human stupidity is a powerful force. If you want to know why most people never reach this milestone, look at their own behavior. It's not bad luck, it's bad habits. And the bill for stupidity always comes with interest. Everyone loves the idea of compound interest. Nobody loves the reality of waiting. The first $100,000 isn't built in a month, and it isn't built in a year. For most people, it takes a decade of grinding, saving, and avoiding stupid things. That is why so few get there. They don't have the stomach for the boredom. Discipline isn't glamorous. It looks like saying no to dinners out, driving an old car for a few more years, skipping a vacation you can technically afford because you know those dollars are soldiers that belong on the battlefield of compound interest. People think discipline is some heroic trait, but it's not. It's doing the boring, obvious things long enough to win. I learned this when I was young. When everyone else was busy keeping up with the Joneses, I kept my head down and accumulated capital. Was it fun? No. Did it look exciting? No. But wealth was forged in the boring years. The trick is not to break. Markets will fall. You will feel like a fool for saving when stocks drop by 30%. You will be tempted to sell, walk away, and tell yourself it was all pointless. Exactly then is when discipline separates the rich from the rest. Anyone can save when the market is roaring. Anyone can invest when optimism is high. But when everything turns to ash, and it will, you find out who has the spine to keep going. I've seen people with all the advantages, brains, connections, high salaries, blow themselves up because they couldn't handle the routine. They needed excitement. They needed to feel smart. So they chased schemes, bet on fads, or quit when it got painful. Discipline was beneath their dignity. Well, discipline is what gets you across the line. It isn't brains. It isn't luck. It isn't even hard work after a certain point. It is a pure, stubborn refusal to stop throwing shovels of coal into the furnace while everyone else wanders off. You don't need to be brilliant. You just need to be relentless. The market eventually rewards endurance. It always has. So, if you want that first $100,000, forget about the flashiness. Forget about the shortcuts. Just endure. Endure the boredom. Endure the setbacks. Endure the years when it feels like nothing is happening. Because the truth is, something is happening. Compound interest just doesn't reveal itself until you've earned the right to see it. There is a moment in wealth creation that feels almost supernatural. It's the day your capital earns more than you do. Up until then, you've been dragging a rock up a hill. Every dollar came from sweat. Every ounce of progress came from self-denial. You saved, you endured, and you wondered if the pain was worth it. Then, one year, you look at the numbers. Your investments quietly bring in 10 or 20 grand, more than you could set aside from your paycheck, and you realize you've crossed the line. That is when capital starts talking back. It whispers, "Relax, I'll carry most of the load now." That whisper changes your psychology forever. For the first time, you aren't just a worker, you are a capitalist. Your dollars are your employees. And unlike real employees, they don't complain, don't strike, and don't gossip in the break room. They just multiply year after year without taking a single sick day. This is the point where the game flips. Saving feels less like a sacrifice and more like feeding a machine that pays you back. Watching the balance grow becomes addictive. You want to put in more, not less. This is also the moment when outsiders start calling you lucky. They see your capital snowballing, but they missed the decade of grinding that built the base. They didn't see you eating cheap dinners and driving old cars while they were burning money on nonsense. Luck has nothing to do with it. Discipline has everything to do with it. Once your capital outpaces your labor, the wealth curve gets steeper. 100 turns into 200, 200 into 500. Eventually, compound interest eclipses any raise you could ever beg from your boss. That is why the first $100,000 is everything. Without it, you will never reach the tipping point. With it, the system finally tilts in your favor. But here is a warning. If you sabotage yourself after this point by pulling money out, chasing fads, or panicking during downturns, you can still ruin everything. Capital does not forgive stupidity any more than it forgives neglect. However, handled correctly, it becomes your silent partner for life. This is the reward for enduring the long climb. One day, you wake up, and your money is doing more work than you ever could, and it never asks for a paycheck. Reaching $100,000 isn't the finish line, it's the starting gun, and many people still find a way to screw it up. The moment most people pull ahead, they start thinking they're geniuses. They forget how long it took them to climb that hill and start sprinting downhill into stupidity. I've seen it time and time again. Someone saves $100,000, and instead of letting it compound, they decide they're suddenly the next Warren Buffett. They chase hot stocks, speculate on options, and fall for whatever shiny nonsense CNBC is peddling this week. And just like that, 10 years of discipline disappear into one foolish gamble. Others sabotage themselves by rewarding their progress. They hit $100,000 and then celebrate with a bigger mortgage, a fancier car, and vacations that burn the very capital that was supposed to make them free. They confuse a milestone with the finish line and cash out before compound interest can even show its teeth. There is also the problem of leverage. People think borrowing is a shortcut, but it's not. It is a ticking time bomb. I've seen brilliant people go broke because they borrowed against their portfolio, certain that the market could only go up. Then 1987 hit, or 2000, or 2008. The market always finds a way to humble the arrogant. The brutal truth is this: building the first $100,000 requires discipline. Keeping it requires humility. Growing it requires patience. Mess up any of these three, and you are back to zero. And don't fool yourself. Going back to zero after tasting progress is worse than never starting at all. I've seen people crushed by it. They would rather live in denial than admit they burned a decade for nothing. That is why I always say, avoid stupidity first and seek brilliance second. You don't need to be smart to stay rich. You just need not to blow yourself up. The game doesn't get easier just because you hit a milestone. The risks simply change shape. If you think the rules no longer apply to you after $100,000, the market will be happy to prove you wrong. Remember this: the climb to $100,000 is hell, but falling back below, it is worse. Don't let arrogance push you off the ledge you just finished crawling up to. The first $100,000 is pure agony. I've said it before, and I'll say it again. But it's a battle you have to fight. Nobody can compound zero. Nobody can save you from bad habits. Nobody can save you if you insist on living beyond your means. It's not about brilliance, secret formulas, or finding some guru to whisper magic in your ear. It's about discipline. Spend less than you earn. Save the difference. Invest it. Repeat until you cross the line. Simple, brutal, relentless. If you can't do that, nobody can help you. If you can do it, you will unlock the one thing that separates the rich from the poor. Capital that works harder than you ever could. People love to overcomplicate money. They invent jargon, write books, sell courses. Anything to distract you from the ugly truth. You have to survive years of boredom and self-denial before compound interest shows up to bail you out. Most people won't do it, which is why most people stay poor. But if you have the spine, the discipline, and enough common sense to avoid stupid mistakes, debt, envy, and lifestyle creep, you can get there. And once you do, the game changes forever. Your money starts working. Your risk tolerance expands. Opportunities open up. And you stop being a powerless laborer begging for crumbs. So here's the bottom line. Get your first $100,000 by any honest means necessary. Cut your expenses, increase your income, ignore what the neighbors think. Just get it. Because until you do, you aren't even in the game. And if you don't spend less than you earn, I can't help you. And nobody else can either.